You're very welcome to this, our second video in our series on final accounts for junior cycle business based on learning outcome 213 on the specification. So in this video, we're going to just quickly go back over what a trading account was. We learned that in the first video, but then we're going to look at the items that appear in the trading account and what those things actually mean as well. So, quick recap in case you don't remember from the last one, but a revision for you. The trading account is used to calculate the gross profit that the business has made from when it sells its goods and services. So it's used to calculate the gross profit. So, what is in our trading account? There's a few very simple things. You've got sales, opening stock, purchases, carriage inwards, customs duty, closing stock, and cost of sales. Okay? It's really important that we understand what each of those means. It might not seem too relevant now, but as we learn all the other types of accounts, and then when it comes to the end, we have to figure out what goes where. It's really important that if you try to learn all this off, you're never going to remember them. Not a hope in hell. Whereas if you can understand what they mean, it'll make sense where each of them go. So, let's get stuck into it. What are sales? Well, sales is basically the value of goods that are sold by the business. Now, you don't need to know these definitions word perfect. What you just need to know is, in your own words, what do these things mean? So, sales is the money you receive for selling goods and services. Simple as. Opening stock then, okay, so think about stock. Stock is what you have in the warehouse, okay, stuff that you're going to sell to a customer. So opening stock, well, it's what you have at the start of the year. So it's the stock it's the goods you're going to sell to customers that you have at the start of the year that's left over from last year, okay? So the stock you didn't sell last year, it's left over and it's now there for you for this year. Kind of like, remember our opening cash, closing cash idea from the household budgets? Anyway, next up we have purchases. Okay, so think when you purchase something, it means you're going to buy something. So purchase is what the business buys, the cost of the goods buying stuff to sell on to customers, basically. Carriage inwards, okay, bit of a trickier one, this one, okay. Carriage, okay, is a fancy business term for delivery. Okay, so delivery inwards means the cost of delivery for the goods coming into the business. Simples, okay. Next up, we have customs duties or import duty, which you know from the chapter on taxation. And it's basically, you'll be very familiar with this now with Brexit. It's a tax that you pay on goods that you buy from countries outside the European Union. Simple as. Okay. Closing stock then is the opposite to opening stock, okay? So stock is what we're going to sell to customers. It's what you have at the end of the financial year, okay? So whatever stock that you didn't sell this year, but you're going to sell next year, pretty much, okay? Cost of sales then, okay, is our kind of title for all of this, okay? And basically it means how much does it cost the business to sell its goods. Simple as. Okay, so that brings us to the end of the video where we just a quick recap on what a trading account was, looked at the items that appear in a trading account and the terms used in a trading account. I hope this video made sense and that you understood it and you thoroughly enjoyed it. If you did, give the video a like, and if you have a question, ask in the comments. And otherwise, please click that big circular button with my name in the middle of it and subscribe to the channel. Thanks very much for watching. See you in the next video. Bye now.